Hey everyone, this is Moneyflip here from Watchhimtrade.com, your weekly watch list with a review of the week going into the week Monday, March the 14th, 2016. I have a lot of tickers for you, so we'll just get right started. First of all, I want to go over the indices and the futures, and then I'll go into the tickers that I have. So right now, I have up a chart of the SPX. The thing about the SPX is we put in a very nice candle. Hence, it was Thursday. We had a doji and we had rollover, and it seems like a lot of people were rolling over their contracts, and we got a slow grind higher. So we got above this 618 off of the first fib retracement. And I have another one back here. I always like to do 2 or 3 just to get a better level. We got over this 200 EMA, closed above it. Sorry, that's the 200 moving average, but EMA, simple moving average, they're still pretty close. So we got over that and closed over it. What I want to see now is for us to push on through and hold that level to continue a bullish move. If not, you're sitting here at resistance. So you have the 200 MA, and you also have this 78.6 retracement line as well. So that could provide some nice resistance right there. So these are your levels to watch tomorrow in the SBUX, the SPX. With that said, I will go right into SPY, which mirrors the SPX, and you're going to see the same thing. Okay, now on SPY, let me do one thing. I didn't draw the other fib work, but you can see where it's over. You can see where it's over the 200. Okay, so as it stays over that 200, I want to see it push on up here. Let me try to draw one more. Let me do it from here. This might be where I had the one of the SBUX the last time. Okay. What I was saying, so that you can see the same thing. Make this a little bit different. I didn't do it. Sorry. Okay. So we got over this 200. All right. I'm looking for this to push on in to the next fib work right here at the 204.73. So we're at 202.76 right now. So just once again, just like the SBUX, watch this 200 moving average to hold and continue to push higher. Next stop would be up here around the 204.50 level just to keep it nice and round. Okay, so that is SPY. Next, I'm going to show you the futures of gold. The thing I'm looking for here on gold, you have this rising wedge right here, and I'm watching to see if gold breaks down. Normally, if gold breaks down, the market is going to shoot even higher. You can see this candle that was put in versus the candle that was put in on Friday of the SPY and the SBUX. So watch gold to see if it breaks down. Also, you have negative divergence right here. Okay, see that right there? So that's showing me that gold might be getting ready to crack, and you have a lot of traders who are watching gold. All right, so that is GC, the gold futures. Next, I want to show the bonds. The bonds, as you can see, bonds are not looking good as they have crossed the ATR trailing stop right here. And that was also some support, all right, that 49 EMA. The market will push higher as long as the bonds continue to fall. So that was a key level of support. If the bonds do not regain that level, the market continues to push higher. As long as the bonds keep pushing down on the 30-year Treasury bond futures, as long as they keep pushing down, the SBUX keep on pushing up. Okay, that's your bonds. That was a key level that was busted on Friday. It could be a fake out and start to rise again, but with that QE out of Europe, some people are saying we're headed to negative interest rates. I doubt it, but we shall see. But anyway, that is ZB, the 30-year bond. Next up is the NASDAQ futures. Now, the NASDAQ futures, one thing I want you to look at, the target is 4,500. Reason why is the distance, okay? We have a baby inverse head and shoulders. Boom, boom, boom. That was your neckline. Pushed up, pulled back, put in a very nice candle. So now, what I'm looking for is the NASDAQ to get over basically 4360. All right. Next stop, the 200 moving average. Next stop, right there. Okay. Which would be another resistance area. Okay. So this one is nothing, the 4360, because we closed at 4348. Futures might open here in a few minutes. As I'm doing this, it's almost 6 p.m. on Sunday evening on the East Coast, so futures open in a few minutes. But anyway, I'm looking for this. If it can get over this level, push to the 200, break the 200, then to right there. Those are my levels. Okay, that is the Nasdaq futures. Okay, now rolling over into the tickers, I'm going to start with Coca-Cola. Coca-Cola, very nice wedge pattern right here that it broke out of. Just kept going to the upside. Now I could move this trend line and tag that right there, but I like to touch more points. So as you can see, Coca-Cola just kept right on going. Coca-Cola seems to be just a tad bit overbought. This is one that I like as a much longer term swing. So I would wait for a pullback, probably. Yeah, I'd wait for this one to pull back to a support area of about 44. Now, some people could say that this was an ascending triangle. I just had a wedge pattern drawn from a long time. But if I do this and go from here like that, granted, I do have my lines already set to do that now, whereas I had them like this before. You could say that was an ascending triangle, but I like the wedge pattern that I had going anyway. But you have this resistance area right here that Coca-Cola broke through, got up above it. This is the reason why I said look for it to pull back to the 44 area if you're looking to swing this one in a longer term account. So that is Coca-Cola. Next up, Amazon. I have an alert set for Amazon to get over 570. If it can push over 570, it can it can push to probably 580. Then next stop will be 585. The thing about Amazon, I like Friday's candle. Put in a decent little hammer candle right here. These are some old fib lines that I had drawn right here. So um, the thing is, it is right here at this 49 EMA. Get over that 49 EMA, basically 570, and this thing could push to 580. Get over that 580 mark, and you might go on and get over this resistance area right here. So if the market keeps on pushing, I do like Amazon to push a little bit more with it. The short-term MACD is curling up, but got a little negative divergence right there. So just keep Amazon on watch. My levels on Amazon, get over 570, push to 575, and break 575. Next stop will be 580. Okay, and that is Amazon. Next is Molina Healthcare, MOH. Had on watch last week. It got over resistance. Um, had a descending channel reversal and closed right over the 200. So this would be your descending channel reversal. Okay, so you had that nice. Sorry, just so you can see, you had a nice channel going on I know my lines are a little funky right now, but anyway, you get the picture. So you had that long descending channel, reversed and broke out of it, okay? Which when it broke out of it, it got over that ATR trailing stop, and it just kept going. Um, Close right over that 200 MA. So what I want to see is Molina hold that level, or if it does pull back, I'd like for it to hold in this range somewhere. At least hold, say 63, 64 area. If it does pull back, and then let it try to take off again. You do have the MACD curling up right here, so I still like this one long term. But they put in a very nice candle, like the indices on Friday. So that is Molina Healthcare. Um, Very good one that I like long. Has definitely reversed its downtrend. Next up, Facebook. Um, Facebook over 110.50 and no resistance for a while. Hence, I have this alert level set right here at 110.45, just under the 150. So if it breaks that, it catches my attention. But Facebook is in a clear, longer term uptrend. Okay, the high back here right after earnings was 117.59. So you get over that 110.50, this puppy has some room to run. Okay, my next stop will be this ATR trailing stop to see where it does gets in there somewhere. Sometimes I like to draw fib work here. See if that shows me anything else. Yeah. If you're looking at the fib work, the 618 is basically resistance. Okay. So same thing. 110.45. Get over that 618 fib. Got plenty of room to run. The next target I probably would have. I like to throw my fibs in here. So I throw in the 786. Yeah, which is right at that ATR trailing stop of 113.46. We'll call that 113.50. Facebook over 110.50 may swing on up to 113.50. Okay, so that is Facebook. Next up, Boeing. Boeing. The reason I have this one, it triggered the ATR trailing stop, which I love this indicator. Um, I'm not gonna say I love it, but I do like it a lot. The ATR trailing stop crossed and it closed above the 49 EMA. The MACDs are still up above the zero line, so I really like this one to the long side. One of the main reasons Boeing had this big downfall was because of a SEC investigation, but I think that's pretty much done with right now. And I know, as someone had told me before, the American consumer has a very short-term memory, so um, this is a stock that I feel like could go ahead and push higher along with the market. So that is Boeing. The one thing I do want to add about Boeing, if the market falls, Boeing is going to fall with it. It normally follows the market. Here's one of my staple swing stocks, Caterpillar. Caterpillar was a dog last year, sort of like Wynn, WYNN, IBM, etc. Um, it's off the bottom, got over the 200 MA, pulled back, and right at the 200 MA. Sorry, it pulled back and it's right at the 200 MA again. So watch for the 200 MA to this one. The red line is the 200. Watch this to hold. Okay. Um, so this is where Caterpillar like ran up to that 200, bounced off of it, came back down. Okay, and just was in a clear downtrend all of last year. Even if I put this on a weekly, okay, put this on a weekly. What is this? March. Here's March again. 1 year. You know, it's been in a downtrend for 2 years now. Okay, so and now if you look on the weekly, Caterpillar has reversed. All right, so I'm gonna take this back to the daily. So here's the most recent few months. Bounce back up. Watch Caterpillar. If it does pull back, see if it can hold that 67 level, somewhere 67, 68, which would be a nice area if it does pull back, which happens to be the ATR trailing stop. Um, and I like this one, to push even higher. Okay, so main thing is that 200. See if it can hold that 200 to push higher. If it doesn't, I just wait for a good pullback back to around 67, 68 area. Okay, and that's Caterpillar. Next up, IR. IR looks a little bit like Caterpillar, but I like the indicators a bit more because we crossed the ATR trailing stop here, was in a big downtrend overall, reversed that downtrend for the short term, pushing on up, nice off this support at the bottom after earnings, closed above the 200, actually opened above the 200 and still closed above the 200. So that's what makes me really like Ingersoll, however you pronounce it. So I'm really watching this one to keep on pushing up. If it does pull back, once again, let's see. It's at 58 right now. I don't think it'll pull back that far. Let me do something. Also, I always like to pull out the good old fib work sometimes, see if that helps me see things better. So this would be your first support right here, okay, in this area, 56.75. So you've got it right there, and you've got it right there. I actually like it to pull on back here to about the 54, 55 level. 54.86, 55 is where I would like to get it if it were to pull back. But just watch this one to see if it can continue that trend higher. Next up is ULTA. Now, many people that know me know I kept this one for a long time. But here's the deal with ULTA. ULTA was turning into a dog at the beginning of this year, okay, on the daily. All right. So as you can see, just ran up, ran up, ran up. And then I'm going to have to take this back to a daily for you. So let's go back. So here we are, end of December, January, and then ULTA went from 186.50 all the way down to 146.50. So it pulled 40 bucks. Do the math percentage wise. So then ULTA, along with the market, ran back up, pulled back right here, had a nice day right before earnings. Earnings hit, and boom, look what happens to ULTA. All right, so ULTA is back. Let me check that again. Is that an all-time high? Yeah, that's so quick that ULTA does that. Yep, all-time high. So ULTA, just off of earnings, put it right back on the map. So I look for this one to go ahead and run right on through 200. Okay, huge gap on ULTA, and it actually gapped and ran. So I don't see this one pulling back anytime soon. And I always say women's beauty products, they're not going anywhere. So that's my take on ULTA. Next up, we have good old Disney. Disney. Um, couldn't get over this 49 EMA right here. Watch 99.71. Yeah, I want to watch the 99.71 area and the 38% retracement. It's still under the 49 EMA, so it couldn't get over these levels. This retracement came in right here, which was that little top right there, and then it just pulled back. But the thing about it is, for me, is that it's still under the 49 EMA. Look at the MACDs; both of them are slanting down. So for me, this one is on short watch. If it gets under, what, sorry, checking my notes. Yeah, I want to see this one come under the 97 level. That's why I have my which is a good support level too. So if Disney can break 97, it strongly has my attention. Okay, for short. So that is Disney. Next up, one that has been on watch for a while, been alerted a few times. NTAP. NTAP. Um, this is one I like longer term. Okay, NTAP has come all the way up, basically to push that 50% retracement. Got back over its ATR trailing stop. MACD is hooking up. Longer term MACD pretty much flat right now. But I like that candle put in on Friday. This is one I would love for it to pull back, pretty much into that $25 area or the 45 EMA, 49 EMA, which is 25 as well. So I'd like to see this one pull back a bit to get into it long. It's not one that I would be trying to short. I like this one much more longer to at least to push on up into that 200 MA. But NTAP has been doing quite well lately, and I really like this one. So that is NTAP. Next up is Bed Bath & Beyond. So Bed Bath & Beyond has a long downtrend, okay? Really consolidated down here, caught itself along with the market as well, okay? But the thing about Bed Bath & Beyond, I'm watching 49.50 just to draw my attention to it, but the real level is 49, okay? Um, if it breaks 49 right there, okay? You break 49, which is basically some support right in here and right through here, then this thing can come on down and break through the 49 EMA and just push even lower. The MACDs are curling down, so if the market loses some of its momentum, I like this one for a good short. Okay, and with that said, this is something I like to do. I like to set my alerts because I have so much stuff on watch. So see that you can see that much clearer now that I have the 49 level set. So break the 49, and I think this one will be a pretty good short. Next up, that old expensive coffee from Starbucks. I still say it's not worth it. But here's something about Starbucks. See how this ATR is just staying red the whole time? You got a nice little fake out right there like it wanted to go long because it bounced off the 200. Then it flushed the 200, came back up, bouncing it again. Looks like Starbucks wants to come on down. Now see this descending channel I have right here? Sometimes I like to come into what is called a 78-minute or a 39-minute chart to get a better view in the shorter term of what some stocks may do. So you can see this trend line here, bam, to there. All right. You had sorry, and you had the same thing here. You had a trend running up there, okay, flattened out, bounced a little bit, and now the trend reverses and come back down. So the thing about it is, Facebook is under the 200 and the 49 EMA, okay. So now I'll take this back to a daily. Let's see what this looks like on the hourly. Hourly looks just as good. Okay, even if I take this back to the hourly, you can see what Starbucks has done over the last few days. Okay, this is a 20-day hourly chart, and the MACD is curling back down as well. Okay, and there we are. All right, so that's Starbucks, which I have for a short. Next up, good old Shake Shack. This one I have on watch for a short. Okay, um, this one to me is just flat out weak because after earnings you had a gap down, still pushing down. That little arrow shows a crossover of my 8 and 20. I just keep it off to keep the charts clearer. Biggest thing was that ATR crossover. Okay, so what I'm looking for on SHAK is continued move to the downside. All right, didn't participate on Friday. It was still down. So I'm first target on SHAK is 3160. Yeah, which is this low right here. That's my first target. Would be 3160. Second target would be 30. You break 30, my third target. Now I'm coming into the fib extensions, which would be 2823, and then to here. So once again, Shake Shack for short. First target 3160, second target 30, third target 2823. All right, Shake Shack for the short. Next up, Con Edison. This has been a nice chart. Okay, Con Edison at all-time highs. So I went back and looked at this chart earlier. If it pulls back, let it pull back. Okay, I just keep this one on watch if I were you. This one is doing really well long term. So it's banging its head right here to a little bit of resistance. So let it pull back. If you can get it back down around 70, that would be great. But then go ahead and let this thing push on up. And if I were to fib this one, and this will be a rough fib. Yeah, the 38 would be 68.74. It might not get that far, but it's possible that it could. But that's why I say I'd nibble on some at 60. Okay, so that is Con Edison ED. Next up is Kellogg's. So Kellogg's, I had this channel right here. You might even say it's a rising wedge because this is a little bit tighter right here, but we're just going to call it a rising channel. I am going to move this out just a little bit because we're still touching 2 or 3 points. By doing that, that's a little bit cleaner. Okay, so you still have that rising channel. I still like this one to pull on up. The MACD in both of them are well, the shorter term MACD is curling up, so might be stalling out a little bit. Maybe it wants to pull back if the market does a little bit, but then I still like this one to the longer term. So that is Kellogg's. And the last one is Netflix. The thing about Netflix is you can see this rising channel right here. Also crossed the ATR trailing stop. So cross ATR trailing stop, I think Thursday last week. Friday, Thursday, Wednesday, Tuesday, Monday, Friday. Yeah, last Friday. It crossed the ATR trailing stop. Still pushing up, but here's the issue. Okay, right now it doesn't give me the buy signal, but that's just me because my MACD is curling down and it's still under the 49 EMA. Get on back up above that 49 EMA, a little bit of market participation, and this thing could just go ahead and push on again. Okay, key levels on Netflix. Let me draw this out. Basically, it's that 100. Over 100, I'm bullish on Netflix, but it's got to get over that 100. And the other thing is, if you get over 100, that's this old ATR stop right here. So let Netflix get over 100, and let's see if she can push on up to about 102.50, maybe going up here to 105. Netflix can put in those type of days. So anyway, these are just trade ideas, no recommendation to buy or sell. But keep these on your watch. Some of these could turn out to be some really good swing plays. The video is timestamped, so you may go back and look at any time. Many of these may not pan out tomorrow or the next day, but that's why they're a weekly watch list. But these are some of the best setups that I see personally. Anyway, good luck. Happy trading. See you in chat. Peace.